Hey, what's going on, everyone? Welcome to another episode of the Great Black Speakers Podcast, where we connect through conversation. I am your host, Lawrence Watkins. I am the founder and CEO of Great Black Speakers Bureau. I'm also the president and chief operating officer of the Black Business School. So today we have a very special guest. We're here with Mr. Sean LeDree, and Sean is the founder and CEO of Loop Investing Technologies. Loop Investing is a FinTech company that is creating a full financial management platform that includes investment management, merchant banking, and retail banking. And you can find out more about Sean and his company at loopinvesting.com. That's Loop, L-O-O-P, investing.com. And today we're talking about how this Black FinTech company that's started and ran by Sean is attempting to be the national community bank. So we're going to be talking all about that right now. So Sean, how are you doing today?
Doing great. Thank you so much for having me on, Lawrence. I really appreciate being here.
Yes, my pleasure. So can you start off by telling the audience what is Loop Investing and what do you guys aim to do and how did you get to this point in your career?
Yeah, absolutely, absolutely. So, uh, before starting off, I worked on Wall Street, and so I've always been kind of fascinated that Wall Street, the financial machine, really works very well for certain parts of our country. And one of the things growing up on the south side of Chicago, we had Pullman Bank. And I've always wanted to know, like, why aren't there any really great financial institutions that are for our people, that are by our people, and that are helping our people. And so one of the things I started studying was just like these giving circles, susus. And so from that standpoint, susus really are a great mechanism in terms of community. It's the community coming together, being there for one another when you really need to. But there are so many things that necessarily aren't really desirable with susus. However, we have technology. And so I began creating Loop with the idea of if we can take technology and take the spirit of susus and really try to help some of the issues that are just specifically problematic to Black and Latino communities in terms of saying, how do we take the spending power that is so vast and actually translate that into actual accumulative wealth. And so we've been working on this, and I have a great team that I'm partnering with. And our idea is to actually bring this to market and launch it. And so I got here by way of my experience on Wall Street, by way of going to grad school, and by way of actually growing up on the south side of Chicago and seeing firsthand how we're actually banked in large minority communities versus the suburbs or versus downtown.
Well, talk about that then. So, talk about your
Mhm.
experience on Wall Street, and then after that, let's talk about what are the differences that you see in terms of how communities are banked in the south side of Chicago versus in the suburbs versus, let's say, the financial center of New York City.
Yeah, absolutely. So, one of the things I've always been fascinated by was just, stocks. I remember growing up and actually watching channels, the business channels, way before CNBC and Fox News, Fox Business, and literally it would have the ticker tape, and I was just like, wow, what is that? And I remember getting my first internship after high school and being on a trading floor in Chicago. And there was this guy, he was really excited. It was just so many noises going around. I was like, this is a great environment. I heard somebody pick up the phone and say, hey, you're wasting my time, and then slam the phone down. And I was just like, this is a great environment. And so from that point on, I was just like, I want to be a part of Wall Street. So I was very fortunate and blessed to actually go to work for Morgan Stanley. I worked in their individual fixed income uh, department. My job literally was selling individual bonds to financial advisors. Learned a lot. Really was able to kind of get a solid foundation. And then I had a couple of more additional stops before I actually went on to get my MBA from Duke. After getting my MBA from Duke, was able to actually move over to the institutional side of fixed income and interest rates at Bank of America Merrill Lynch, where I was actually helping to cover some of the largest institutional accounts in the country. When we think about large institutional accounts, talking about PIMCO, JP Morgan Asset Management, as well as some large hedge funds. And so one of the things is that, when you start talking about financial institutions and what is the difference between, say, the South Side of Chicago versus a New York versus the Hamptons or Westchester. Now, again, Westchester and the Hamptons, very affluent areas of New York. So I grew up on the South Side of Chicago. I grew up in an area called Roseland, and Roseland is about 5 mile square radius, about 60,000, give or take, in terms of population. There is one brick and mortar bank, and that brick and mortar bank is on 103rd and King Drive. However, there are 4 payday loans in that 5 mile square radius and 8 currency exchanges, right? And so what I always think about it, Lawrence, is this. We're always told that these communities need to pick themselves up by the bootstraps, that they need to grow and all this other stuff. And it's the equivalent of telling someone that you need to eat healthier, and there are no healthy options. That it's the equivalent of living in a food desert and all you have are fast food options, but you're told that, hey, you guys need to do a better job of saving and investing. And the problem that we see in the South Side of Chicago is not just unique to the Midwest, but it just go to LA, go to East LA, go to Compton, go to Bankhead, where you will actually see brick and mortar banks that have left and have provided a gap in terms of the need of financial services, basic check cashing, loans. These things literally have been left for dead, but there is an abundance of just, currency exchanges and abundance of payday loans. So it's really hard for individuals who are wanting to actually learn more about financial education, be able to actually start thinking about investing and saving so that they can leave an inheritance for their children. And see that for me is the real problem, is that when you have more pawn shops and currency exchanges and more payday loans, and that's all that's given to you, then you're pretty much set up to fail.
Yeah, you know what? I think that's a great point because, when I talk to a lot of people about finance, you talk about these big numbers in terms of bond rates and equities and like all of these different types of things. And we sometimes fail to relate it back to how that affects actual people and
Yeah.
the things that they actually care about, right? So, talk about that just a little bit, because you've kind of brushed on in terms of like why payday loans are bad, but talk about like what is the the real difference of, let's say, a 5% higher interest rate, or with payday loans is way higher than that. Like, what is the effect on the community when you start talking about like these numbers in terms of like something very abstract like money and applying it to, let's say, our communities?
No, that's a great point. So what I would encourage everyone who's really interested in finding out exactly how different communities are banked. There's a wonderful author out there. Her name is Mahira Baradaran, right? And she has wrote 2 great books on how the other side banks, as well as the color of money. And so within that, you start talking about, okay, how does why do people take out payday loans? And the scary thing about it is that people who take out payday loans aren't uneducated, right? They have either graduated from high school, they have some type of college, college years underneath their belt. So they're not making this decision, hey, willy-nilly, and they're not irresponsible. They know for damn sure that this is a high interest rate, and they don't take it lightly. However, when Bank of America is not in your community and they're not making small personal loans, what other option do you have, right? And so from that standpoint, yes, it's kind of suicidal to take out a payday loan, because we know the average payday loan is 400% interest, and that's ridiculous. And that so the question then becomes, what other option do you have besides using your check account to actually bounce checks off of? You're being charged 35% every time you go over, right? You can take out this payday loan, or you can try to borrow from friends and family. And so, from the standpoint that these options have been forced upon certain communities, and these options are never, ever in discussions when you start talking about living on the Upper East Side or living on the Upper West Side, right? That's never a situation. And so, the idea has to be, are there other mechanisms for individuals who are hardworking to be put on a path to credit normalcy where they can actually get a regular rate of interest for a basic loan, right? Can they actually be put on a path to where they can improve their FICO score? Because one of the things that I teach, I teach at my church that I grew up in, and we've been doing some phenomenal classes. Last couple of classes, we talked about sort of like this path. When you go to school and you go away to college for the first time, you got to get a license to get a gun. You got you got to be 18 to vote. You got to have a license to drive. You have to actually be 24 before you can rent a car by yourself. But to sign up for a credit card to get yourself in debt, all you have to do is be 18, and there's nobody there saying, hey, look, these are the things that you don't want to do. And a lot of people get put on this slippery slope early on in college because there are no home ec classes. There's nobody to really kind of, big up somebody and say, hey, look, let me take you underneath my wings and say, hey, don't sign up for the credit card. You're going to be on the quad and they're going to be giving out free t-shirts and you're going to be thinking about the ramen noodles. You're going to be thinking about sardines and you're going to say, man, I got this plastic in my pocket, and you're going to go big a couple of weekends. But when that bill comes, you're going to start scratching your head. So, for me, it's like the financial education for our communities and the ability to actually execute go hand in hand.
Yeah, I mean, I had a guest on here not too long ago named Stephen Hughes. And Stephen,
Mm-hmm.
he teaches financial literacy to college students, but he was talking about when he got to college, he was able to open up maybe like 40 or $50,000 lines for credit. But then by the time he left college, he had like a 358 or 360 credit score or something. I can't remember the exact number is, but then he's been trying to just rebuild, over the past, 5 or 10 years, since then. And you're
Mm-hmm.
right. I mean, there are no there are only bad options in a lot of these neighborhoods, right? And we need, I guess, better options out there. So let's talk about the better option, which
Yeah.
is what you're building and what else is out there, right? So talk a little bit more about what Loop Investing is building, and why are you making it a comprehensive platform? And I guess what's the ultimate vision, for your business?
Yeah, and what we really are looking to do is to build an entire financial platform so that capital can be freely available no matter where you are specifically in the community, right? So here's the thing, and we know that this is a real issue. When somebody makes it, we always want, like, if you grew up on the west side of Chicago or you grew up in Cabrini Green, the idea is for you to make it. The idea is not for you to go on to a 4-year education, go down to University of Illinois, accumulate this debt, accumulate all this knowledge, and then come back, right? That's never the idea. But what happens when you do move out of where you grew up? How do you give back, right? And short of giving money to mama and them, or giving money to your friends and family, or buying a small business and keeping your day job, there's really no way for you to give back. And so we're looking at that from an individual perspective. Like, how do we help individuals who have, quote unquote, been able to make it, be able to go back and give and invest in a meaningful way? Because here's the thing, if Lawrence, if I'm your financial advisor and we look at your portfolio and we say, hey, look, you got X amount in fixed income, X amount in equities. So what are we going to do in terms of alternative investments, right? So I tell you, well, look, KKR has this great real estate investment, this great REIT. That investment into that REIT is going into downtowns. That investment in that REIT is going into development in pretty much communities that don't look like look like communities that you and I live in or you and I grew up in. So that is a problem, because we know that there are Black and brown dollars who literally would love the opportunity to invest in their community to do two things. To, number one, get a profit, right? We never ever want to sacrifice profit for the sake of doing good. But then also too, if I can get a healthy rate of return and and do good, sign me up. So we want to take that route. We want to be able also to help small businesses. And also too, we want to be able to give real options to individuals who are hardworking. I'll never forget the fact that I split time between my mother, who was raising me single, and then also to my grandmother. And so, from that standpoint, what bank or what financial services is catering to those individuals who are hardworking? Why is it that if you work downtown, that's the only time that you get to actually see a business professional or a banking professional? Why is it that the only bank branch near you is 5-10 miles away, and and if you don't have a car, God help you, right? And so I think that this space, there are a lot of silos, there are a lot of different startups who are trying to do this, but no one is actually trying to bring this all together, because one of the things that I'm hearing as I'm talking to people is convenience, right? That how I already got 10,000 apps on my phone. Why do I need 60 apps just to do checking, banking, saving, and investing, and financial education? So that's one of the things that we want to do, and we're really obsessed about is making it easy. Because one of the things is that I had a conversation yesterday, and I'll wrap it up. But I had a conversation yesterday with a young man who said, "Hey, Sean, I really want to invest. I really want to invest in the market." And I look at Apple, and then I see the fact that Apple is trading at X. But then I also look at Google, and Google's trading at $2,000 a share. And man, I just don't got the money for it right now. You know what? I'm gonna wait for the price to come down. Click. He called me up. He calls me up a year later, and I kid you not, verbatim, Lawrence, he says the same thing. And there are a lot, and he's not an outlier. There's a lot of individuals who say, "Hey, look, I want to invest. I want to do better. I want to be on a path where I'm accumulating wealth." However, when I start looking at these things from my vantage point, this is too hard. So you know what? I'm just going to push it off, and I'll come back to it. And there's this vicious cycle of where we're constantly repeating ourselves. It's like a sick version of Prometheus, right? So what we want to do is say, "Hey, look, no matter where you are, we want to help you, and we want to get you out of this vicious cycle where you're doing nothing and actually get you on the right path."
Well, I think that's important, and you brought up a whole nother conversation with regards to who's advising our people with money, even from the middle class who have money to invest to our rich athletes to others who may be in banking, where their first thought is to go to KKR, private equity, whatever, and have people invest on that particular front, right?
Yeah.
And not investing in what you're talking about. But one question I'm still having is I don't fully understand how your platform is solving that problem, right? So in terms of what happens. So let's say I have $50,000 to invest. Am I just putting that money over on your side, and you guys are making the investments on the back end, or do I have the opportunity to invest directly into, I guess, different businesses or projects that you have on your platform?
Yeah, that's a great question. So one of the ways that we're going to actually make it easier is that by investing in Loop, we will actually seek out funds that are specifically designed to help provide capital to the small businesses in communities that look like you and me, right? That specifically are going towards first-time entrepreneurs, entrepreneurs who have actually been in the community and have been institutions who literally can't get can't get a loan because there's only one brick and mortar bank. And specifically, their standards are so high and so astronomical, right? So when you're investing with us as an individual, and we start talking about, hey, tell us what your risk tolerance is, tell us, how you want to be invested. After we get through the normal specifics about what type of investor are you, now when we start talking about, okay, every risk, every balanced portfolio should have some measure of exposure to alternative investments. Well, as opposed to us looking and seeking to put your money into an alternative investment in a REIT or KKR or something like that, are there other ways and other funds that we can invest in so that we can actually do a couple of things, so that you can actually invest in communities that you actually care about, and number two, that the actual small businesses in those communities can actually receive those funds. And so the great thing about technology and where we are, Lawrence, is that is no longer a pipe dream. that there are institutions out there, there are also entities out there specifically that are going after this front. And my thoughts are is that with the most recent uprising with the Black Lives Matter movement and more consciousness about, hey, you know, during as PPP was getting doled out, you know, only 20%, 30% of African American and Latino businesses were actually able to get a loan. Meanwhile, you hear about the Lakers, you hear about Ruth Chris being able to get these loans, and that wasn't the intention, right? And so, you know, so what we're going to actually do is use our technology and use our platform to actually create a more seamless investment experience for individuals who really kind of care about my end dollars getting into the right hands.
Love it. I'm here with Sean LeDree. Sean is the founder and CEO of Loop Investing Technologies, a FinTech company that is creating a full financial management platform that includes investment management, merchant banking, and retail banking. You can find out more about him and his company at loopinvesting.com. That's loopinvesting.com. If you all have any questions for Sean, please go ahead and put it into chat. We have about 60 people watching right now. So yeah, quite a few of you are out here interested in this subject, but I had no doubt about that even to begin with. So please check out Sean and Loop Investing. And also make sure that you like this video, share and subscribe. Actually, on the count of 3, if everyone can press the thumbs up button on YouTube, that would be great. 1, 2, 3. Go ahead and press that thumbs up button and show Sean some love so YouTube shows us some love as well. All right. Let's talk a little bit about, let's see, where do I want to go with this? Let's talk about black banks.
Mm-hmm.
Yeah. And I guess, I mean, you mentioned the book, you know, The Color of Money. I mean, let's just start there, right? So you mentioned the book, The Color of Money, and, you know, she has been everywhere. The Color of Law is, I guess, the sister book I think of it as, since they both, you know, talk about similar things. You know, one talks about real estate, the other talks about the banking and, you know, black communities, that type of stuff as well.
Yeah.
Talk about, I guess, you know, just your being on Wall Street, your experience with maybe black banks, and then how do we continue to accelerate the capital flow, you know, within our communities, using those institutions, and then what you're doing too, of course. Yeah,
that's a great point. So, you know, one of the things that as you read the book and you're hearing passages that you know, community banks necessarily are lending to black customers, and you know, they're really hamstrung in terms of their inability to actually make a loan. They have depositors who have, you know, small checking accounts, and that, you know, there's redlining. Like, you would think that they're talking about our situation right now, right? And what they're really describing is the 1920s. They're describing the 1800s. So the question is, how is it that we're in the year 2020 and we're still having the same damn problem, right? And so, you know, when we began 2008, I believe that there were about, you know, don't quote me on this, I believe that there are about less than 100 black community banks. And after 2008, I think it's around 50 or 60. Currently, right now, there's about almost 25 black community banks. And why is that a problem? Why is that a problem? So take a bank like Shore Bank, right? I grew up in Chicago. Shore Bank used to be South Shore Bank. Anybody and everybody who lived on the south side of Chicago knew about Shore Bank. I didn't realize that Shore Bank literally was upheld and actually recognized by President Clinton as being a model for lending to the community. That the founder of Kiva actually came and talked to them about how did they actually get around this problem. Before he launched Kiva, he came to Shore Bank to ask them, how does this work, right? And so they were ahead of their time. The problem is that so many of our black banking institutions, that when the shocks come that we're ill prepared for, like the pandemic, like the credit melees of 2008, that we don't have a support system in place to really help absorb the shock of these banks. And so, the other thing too is that, well, if more of us actually banked at, Carter Bank in New York or United in Atlanta, or would that flip the script? Possibly, right? But in her book, and I really like it, the deck is stacked against us. Traditional banking, as it stands, in terms of saying, well, if we just take our money and we just go deposit it into this bank, then that should be enough. No, 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 that's not just enough, because the actual standpoint is that is a loan for that bank. That is a demand deposit. That, even though it's there and it's nice to have, whenever there is money withdrawn from that bank, the bank has to cover it. And the banks make money on their ability to actually make loans long term, whether that be a car note, whether that be an actual mortgage, and they're making money off of that spread. So if you have a actual deposit base that fluctuates and is constantly transaction, how can you really say, I can start making loans, I can start doing all these things in order to stay profitable and sustain me should something happen? So, the one thing that I really believe that's going to be our salvation is that we have to start thinking outside the box. We have to actually start utilizing technology the same way that a Chime has been able to been able to actually open up 5 million accounts. Now, again, I'm not saying that those are 5 million unique users, but according to Chime, they have 5 million actual banking accounts. That makes them one of the top 20 banking by actual accounts in the United States. When you start thinking about somebody like Edcorns and Stash being able to overnight combined have over close to, I'm going to say between the two of them, have close to 4 million different unique users, right? So we have to actually look at how can we not walk away from community banks because they need our help, but how can we leverage technology in order to make sure that they stay in existence, because their existence is important. Every community has its own financial institution, and I think that there's nothing wrong with that. We absolutely need that. But how can we actually bring these institutions forward into the 21st century and be able to make sure that they stand and are around for the next century?
I was reading a book called Private Empires, and it's about ExxonMobil and ExxonMobil's influence on the world. And it was interesting when they were talking about working with just different world governments, because they are strong enough and powerful enough in terms of just the oil the oil industry to kind of be their own independent entity, because they have so much power worldwide. But one of the things that they mentioned, and it kind of made me think, or what you were talking about kind of made me think of it, is like this risk assessment, right? In terms of assessing risk and going to like different countries, that type of thing. They don't really care about who the president or the dictator or whoever is like in the particular company or a country, as long as their oil keeps flowing. And they kind of assess that in advance, where they're looking at like 100-year time horizon in terms of the stability of a different country in a different region. Yeah. And what you mentioned in regards to, I guess, the risk fluctuations in terms of even car loans, right? In terms of how a bank may, look at that. From your perspective, why isn't Bank of America or Wells Fargo or Chase or whoever going into these areas, from, I guess, a risk management perspective? And are you ever concerned that, they know something that you don't know, or vice versa?
That's a great question. The reason why they're not there is because they can't make any damn money. The bottom line is that I'm so glad that you said risk assessment, right? Because the thing about it is that post 2008, Wall Street almost paid the same amount of money in terms of head count, but was not making as much money pre 2008. And there's a funny story about how one managing director came on the floor the day after, like the day of mass layoffs. Like, they had to sit there and they had to fire all these people. And then he came back the very next day, and the entire trading floor, which was empty yesterday after the mass firings, they had a whole bunch of people. So he pulls over to his secondary guy and he says, well, who are all these people? And it's like, well, that's compliance. right? So the point of the story is that when when a bank actually has to make a decision in terms of who are they going to lend money to, whether they're going to actually approve a $1,000 loan or they're going to approve a $100,000 loan, it costs them the same amount of money to actually approve and service that loan. So which one would you rather approve, right? Which one would you rather focus on? And so that is the dilemma that we have, is that Bank of America, Chase, and Wells Fargo have strategically, and I don't blame them, they have strategically said, we are going to focus on a handful of zip codes. Case in point, Lincoln Park in the city of Chicago. Lincoln Park is a very Tony area. It is a 5-mile square area. WBEZ actually has a report. If you ever have a second, you can Google it. So WBEZ in there, they did some comparison. They went back and studied. Now, again, Lincoln Park is a 5-mile square radius. Anybody who's familiar with the south side of Chicago.
I used to live there. Sorry. Yeah, go ahead.
Exactly, right? It's a nice area. I love Lincoln Park. I actually lived up there too. I mean, you got the zoo, you got what's that? The Wiener Circle, right? You got a lot of great things. And so what they were saying, Lawrence, is that they said since the year 2000 to now, the banks in the city of Chicago have made 10 times the amount of mortgage loan approvals to that little small 5-mile square radius than the whole entire South Side. And when you start looking at the numbers, and you're just like, damn, right? Because you can actually see it in terms of bearing out. They gave some ridiculous low number of the number of mortgages that Chase will actually approve on the South Side. I don't even want to say it. I think it was like 3 or something per quarter. But when you start thinking about it, like, hey, somebody's selling their condo, somebody's selling their townhouse, and you start looking at the velocity, like, oh wow, right? So these banks have literally made the strategic decision to do what's in the interest of their shareholders. I do not begrudge them. But the question is, who's going to do what's best in the interest of the shareholders of those communities, right? Why is it that it's either feast or famine? And why so often have our communities have been left to kind of fend for themselves, to actually say, okay, we're going to put a branch in you guys' neighborhood, but guess what? Nobody ever is going to get a loan because they don't meet our our credit standards. And even if they do meet the high credit standards, well, okay, you haven't really proven the feasibility of why you need a $150,000 loan, right? So you pretty much have damned the individual with all these high fees. You've damned the individual also because you can't get a personal loan, and you've damned the small business owner, the entrepreneur, because they can't get a loan to expand, even if they have a great option. So I do believe that in my heart of hearts, that when you start thinking about the untapped power of our community, right? The great thing about Black and Latino communities is that when we talk about, and again, I'm not getting religious here, but when you start talking about need, and that's the really fascinating thing about Susus and giving circles. I'm not advocating them because there's potential fraud there, right? However, it's the idea that, look, I know you're my neighbor. I know that person, they're my friend. I know that person, that's my niece, that's my cousin. And we're going to get together collectively, and we're going to actually start helping each other. And whenever there is an actual need, that person will have access to the capital in their time of need, right? And that's how you start getting into situations like, okay, how do we, and you touched on this a little bit, the money multiplier effect, right? So you think about the velocity of a dollar in the Black community. It's like, I was watching the show the other day, Killer Mike with Trigger Warning, and he was saying that, how long does a dollar stay in a community? And he was giving like the actual days, but when it came to the Black community, he said it was like 6 hours. And so you think about it, like, how can we stem the tide? If we can actually have situations of where there are opportunities for just middle income, low income, and as you touched on, individuals who have succeeded, who have means and wealth, if there's a vehicle for us to actually make sure those funds are deployed and actually go to where they're needed most, we can actually stem the tide of seeing, this capital leakage. Again, it's a damn shame that $2.8 trillion in buying power actually is not, is not reflected. That we are when you start talking about median wealth income, median wealth, that the average household median wealth for white America is $135,000. For the average Latino household, it's $9,000, and for African Americans, it's $7,000. Like, and again, this is not like this just happened. And going back to the book, we've been dealing with these things since Reconstruction. And so, I think that, the definition of insanity is doing the same thing over and over and hoping for a different result. I think we really need to look at technology and start looking and seizing this moment to actually stem the tide.
And I would actually want to touch on FinTech here in one moment, because listening to you speak just brought up a couple of different things in terms of why this is a good opportunity for Black entrepreneurs to kind of get into this space as well. But before we do that, just as a reminder, everyone, I'm here with Sean LeDree. Sean is the founder and CEO of Loop Investing Technologies, a FinTech company that is creating a full financial management platform that includes investment management, merchant banking, and retail banking as well. And you can find out more about his company at loopinvesting.com. That is loopinvesting.com. And today we're talking about Sean and his Black FinTech company and how they aim to be the national community bank. So please make sure that you press the thumbs up button, show Sean some love, show this video some love, so that we can get some additional promotion and circulation, and also share and subscribe to the Black financial content if you would like to see more interviews like the interview we're doing today here with Sean. Sean, let's talk a little bit about FinTech before we get out of here. And yeah. So a couple of things came, just an extension of what we just talked about before, right? Excuse me. Yeah, so an extension of what we just talked about before in regards to why Bank of America isn't going into these neighborhoods, that type of thing. And you mentioned it costs the same to service and to create a loan of 10,000 as it does 100,000 or $1 million. So that's why they are concentrating all of their energy into like these these areas like Lincoln Park in Chicago or whatever it might be, right?
Yeah.
But I also see that as opportunity for Black entrepreneurs such as yourself and other people
Absolutely.
who may be watching this interview. So can you talk about the opportunities in this FinTech space? What came to my mind was, if you're Bank of America, whatever new business or business that you're getting into, you need to make millions and millions and millions or even billions of dollars to actually, from an opportunity cost perspective, to make sure that's actually worth it for you. Right. When you are a smaller entrepreneur or someone who's just trying to go after a niche market, you don't really need that to actually have a sustained business that makes you free from the corporate plantation, basically. Right. And when I thought about this, there was another conversation with a guy named Jason Fried. Jason's a tech entrepreneur in Chicago. He started a company called Basecamp and then has a new email service that's getting a lot of publicity called Hey, that is basically like a competitor to Google in certain types of way, where Google's a free service, but Hey costs $100 a month. But the problem, or not $100 a month, $100 a year. But the problems that Hey solves at $100 a year, it may not be free, for Google, but they don't need $1 billion return on investment, to justify that expense in like getting into like that particular industry. They'll be good with making $10 million a year or $20 million a year, for their company, right? And I see similar opportunities in the FinTech space. So can you talk about, as a Black entrepreneur, what are you seeing as the opportunities in the FinTech space that people can take advantage of?
Yeah, absolutely. So I love the fact that, you talk about like these large numbers, right? That, when Bank of America, or I think it was Chase or whoever said it, like, we're going to give 100 million or 400 million over the next 10 years. That's not even a rounding error for these banks, right? And for that standpoint, there's so much work to be done, specifically on the FinTech standpoint, right? So one of the companies that I actually love and watch is the fact that they're pairing up with an actual church to help those churches who necessarily don't have the budget to create their own app or something like that, and who may not be that savvy, but what they can do is sign up and their parishioners can actually give. One of the things that has been so inspirational during this period of time is that as we've seen people get laid off and we've seen this pandemic really kind of wreak havoc on our communities, I've actually talked to a couple of friends who are in ministry actually say, hey, look, tithing has actually gone up, right? And so it's the ability of this company where they actually have an app and you can actually give by sending a text. And it's really thinking about these opportunities of, moving further and further away from a cashless society, being able to actually make it easier to, in terms of these small entrepreneurs, be able to find an answer to a Square or answer to an actual PayPal, to where we get to keep a percentage of that money, right? And we're not just giving it away wholeheartedly. Now, look, I like Jack. I like the fact that he's woke and he's conscious, but you know what? Square's not the only game in time, right? There are other opportunities for us, because when you start thinking about all the barbershops, all the salons that really don't operate in cash, is there some way that we can actually white label or use payment systems? And one of the things that I'm actually seeing is that the payment space has not been spoken for. There are so many other developments where there are literally companies that will allow you to come on and actually white label should you have the numbers. So that's one thing that we can be also thinking about. What I really would I think is going to be the next avenue is, we haven't really talked about the tokenization that has taken place in the same way that we've seen in Africa with, I'm drawing a blank on the name, M-Pesa, right? We haven't seen that yet. Now, we've seen Apple Pay and we've seen Google Pay, but we really haven't seen sort of like, hey, I don't need to be connected to a specific, cell phone carrier or a specific cell phone. Like, how can we actually get that tokenization in our communities, to whereas it's accepted by the McDonald's on the south side, the Herald's on the south side, right, as well as other places? Because again, we've seen sort of these things take place on a restaurant front. Like if you go to New York City and you go to some of these little small niche restaurants like Chopped or Melt Shop, they actually have a company out of Boston. They have like the scanner that is combined with your points, as well as it allows you to pay with the set credit card, right? I think that market specifically for Latino and African American communities are there, and that will actually help us push further and further away from this need to actually have cash on hand.
Got it, man. We're getting deep here. I mean, people in the chat say, "You talking about blockchain now?" That type of thing. But we actually don't have time to talk about that, actually. So I actually have to get out of here. My wife just text messaged me and said I need to go take over childcare for the next few hours. So I'm going to go ahead and wrap up. Sorry, I won't be able to have time to take questions from the audience. But I have been doing something new, Sean, with every guest that's coming on now. Just a few rapid fire questions that I have for you before we end. But before we do that, how can people get in contact with you and learn more about your business?
Absolutely, absolutely. So as Lawrence has said, please go to loopinvesting.com, sign up. We want to stay in touch with you. Also, if you actually sign up today and say, hey, heard you speak today via YouTube, I have a document on 7 ways that you can actually save money right now. These are tips that honestly, I've shared with people who have been in the industry, and they're like, wow, I didn't know that, right? So definitely want to have you guys follow us and want to stay in contact with you. So go to loopinvesting.com and sign up, and that's the best way to stay in contact with us.
All right, here are my rapid fire questions for you. So number 1, what's your favorite business book of all time?
Favorite business book of all time is Why Should White Guys Have All the Fun by Reg Lewis.
Okay, so Reginald Lewis, of course, Black business legend. So second question is there any CEO or company that you are like following and studying right now to help you with your business?
Yeah, I mean, I think that we're actually trying to create an entire ecosystem and a platform. So, I look at Uber and I also look at Airbnb in terms of like, how do you actually create a system that actually is going to pull people to you and force people to actually use your platform.
Who is your favorite historical figure from Black history?
My favorite historical figure is Martin Luther King Jr. Now, a lot of people are familiar with Dr. King and the warm and fuzzy Dr. King, but we really don't talk about the Dr. King that was militant. And we, the fact that he said, we come today and we have returned with a check that says insufficient funds, and that Dr. King talked about economic justice, right? And so that's the piece that always gets missing. So everybody wants to quote, that no man should be judged by the color of his skin, yada yada yada. But Dr. King was about, hey, look, we need to get paid, and so from that standpoint, I think that he hit both ends of the spectrum in terms of our needs.
How many hours of sleep do you get at night?
If a good night for me is 6 hours or 5 hours.
Okay, yeah, I would be on fumes every day with that. All right, and my last question is, are you in your 40s yet?
Yes, I am.
Okay,
Yes, I am.
so if you go back in time, what advice would you give your 20-year-old self?
Wow. The advice I would give my 20-year-old self is to slow down and to just enjoy the moment. And I think that, your 20s are meant to experiment. What I would tell my 20-year-old self is to do more traveling, to go see more places, because as you get older, as you get married, you have kids, you don't live for yourself. And so I think the greatest things you can do in your 20s is get real experiences, go volunteer, go to different countries, learn a different language. These are all things that will help you down the road.
Wonderful, wonderful, Sean. Thank you so much for being my guest on the Black Financial Channel today. So before everyone gets out of here, please make sure that you press the thumbs up button. Also share and subscribe. And as a reminder, we've been here with Sean LeDree. Sean is the founder and CEO of Loop Investing Technologies, a FinTech company that is creating a full financial management platform that includes investment management, merchant banking, and retail banking. You can find out more about his company at loopinvesting.com. That's Loop, LOOP, investing.com. And yeah, make sure you press the thumbs up before you guys get out of here today. So on behalf of Sean LeDree, my name is Lawrence Watkins. You all take care, be well, and be blessed. Bye.